So it closed at the top of the implied move for the day, almost. Yes, a little bit below the net implied move, above the single day. Tomorrow's a half day, and we're wedged up here right against Vega neutral into tomorrow's open. So um, obviously, we get a flip in the market maker's book above VN as their book turn, like the returns on their book turn concave, which will change the hedging dynamics depending on how much Vega gets pushed in the money. But don't forget that if we do move above Vega neutral, trends are sustained. So you get an uptrend, it's likely to continue. You get a downtrend, it's likely to continue back to VN. If enough short vol positioning builds up at VN, it can start to act as like support as they attempt to protect downside pits. Out here on ES on this contract, we have a new all-time high. We do not have a new all-time high on SPX yet, though. But today's high marked a new one. Could get a little pullback from here. Maybe back to trend in the overnight, which would be, say, like maybe back towards the like 69.30 level, closer to where we opened today. I wouldn't be surprised if we saw some pullback and then more put selling because the negative carry really doesn't incentivize a lot of put selling up here. Although we're seeing a lot of it on the zero DTE, it's not so great further out. So there still will be issues building and maintaining support at these levels. Dollar continued its decline today, with yields in the belly of the curve still rising, so between the 2 and the 10, but yields at the top end of the curve falling a little bit. Commodities, another big leg up today on the index futures. Gold up, precious metals outperforming a lot. Copper up 1%. Silver 3, almost 3.5%. Gold 1.17%. Even oil moving up towards 58.50 a barrel. Correlation on the 1 month started to turn around at the end of the day. We saw participants kind of push back against that, but this is a reversal in the trend of short-term correlation. As we move into the blackout period for corporate buybacks, I wouldn't be surprised if we start to see dispersion break down, at least on the short-dated contracts. So next couple days, we might see some downside spike in volatility, possibly after the holiday. I'm not sure if we'll see it tomorrow, but we are seeing some erosion in that position there. And 3 month kind of turning around a little bit, but not nearly in as extreme a fashion. Bond volatility is still nothing to speak of. Leverage on the carry trade pulled back from a new all-time high set earlier today. Forward yield on volatility is around negative 18%. Skews still pushing up. Breadth looking a little better over the last like 4 days. 50-day stocks above their 50-day moving average, basically neck and neck with stocks above their 20-day moving average, both of which are below the 200-day moving average stocks. So decent breadth. Probably improved today with the bump that we saw in financials. Fed fund futures pricing out rate cuts. The GDP, the large amount of growth in GDP and upward price pressures on PCE from the GDP report, trimming back a decent amount of expectations for the June meeting. 10 2-year spread fell a little down to 6.3, and we're still seeing correlation breakdown in between VIX and cash VIX, or VX and cash VIX here. But I will say that we're not seeing correlation breakdown really fast or anything. So the longer term, more leveraged volatility shorting still staying away, and they kind of rolled over with the December OPEX, and we're not seeing a ton of reaccumulation in that positioning yet. But we'll keep an eye on over on GS, we'll keep an eye on total put leverage and see if that position starts to claw back. Leverage fell off today with the upside move, which might indicate like a turnaround over the next couple of days or start to indicate it. I'd want to see leverage fall a bit more. Obviously, it's trending up since December 12th. So I'd want to see it. I'd want to see it probably pull below like 5.7. Then we might see leverage fall off more substantially. Spread on SOFR IOR picked up 3 points wide right now. So as we get nearer the end of the month and cash demand picks up, we're going to be watching this really closely to see what impact the Fed's balance sheet management is having on reserve rates and overnight financing. So short-term cash still expected to be kind of expensive because we technically got a cut out of both the Fed and Bank of Japan. And while the Fed cut might have been supplanted by the $40 billion in monthly buybacks, the Japan cut was not part of that calculation. And so we may still see, some plumbing issues on the front end. And so pay attention to those, especially as we get into the end of the month and short-term cash demand picks up. Interestingly, up volume today, much lower. So from a volume perspective, kind of starting to peak here. It was a pretty significant drop from yesterday, despite the move up. So very low volume upside, it's prone to reversals, and increases in volatility, which we kind of saw towards the end of the day. This is the trend test on the upside trend for SPX. This is where we failed previously. Rejection here could theoretically pull all the way back towards like 6,800. But tomorrow could very well just be kind of a flat day. We still haven't tested the all-time high out at 69.20, so there's some room to the upside for a little bit more of a push. Should probably pay attention to that as well. And then Nvidia is still outperforming, mixed with some of the rest of electronic technology. Tech services did a little bit better across the board, but Oracle probably the biggest mover there. CRM and app doing okay, but I feel like Apple and Nvidia kind of offsetting each other in the technology sector. Finance, we saw pretty broad recoveries across the board. JPM, Citi, Blackstone, Schwab, and BlackRock all doing very well. So big bump for private equity and major banks. Health technology is pretty flat. Producer manufacturing continuing to run, but that's kind of slowing a bit. Tesla bounced back today, which carries consumer durables. Even though durables demand was down substantially, durables inflation was up a little bit. I think core PCE rose. And then the rest of the smaller sectors doing okay, which could indicate start to be indicating a little bit of a sector rotation, but I'd want to see more of a sell-off in tech, and so far it's been leading the pack. And I think that's about it. Yeah. So that's it for today. Thank you guys so much. Merry Christmas, Christmas Eve, the eve of Christmas Eve. And I will see you guys tomorrow morning for our half day before the holiday. Thanks, guys. Have a good one. Catch you later.